Many thanks for joining us. Welcome to Business Incorporated on Channels Television. I'm Chimezie Obi Iwawu. Today on the show, Afrexim Bank announces $1 billion adjustment facility as support measures for the Africa Continental Free Trade Agreement. And South Sudan plans to more than double 2019-2020 spending. Plus, construction firm wants debt settlement as part of Congo IMF deal. Let's get the show started now with the markets. And of course, most of the markets in Africa were negative at intraday. Talking about the JSE index in South Africa, that market shed the most, down 1.10%, while the NSE index lost 0.31% at noon. Meanwhile, in Egypt, the index rose 0.69% at intraday. Kenya closed negative on Monday. And it was a green Tuesday in the Middle East as most of the markets were positive at intraday, with Qatar's index up the most by 0.55%. The market in Saudi Arabia was also up 0.20%. In the UAE, Abu Dhabi's index was up 0.23%, while Dubai's index was unchanged. In Europe, stocks traded lower as a warning of an auto slowdown from German chemicals giant BASF dragged down autos and chemicals companies. In corporate news, Deutsche Bank workers began to leave offices in New York, London, Sydney, and Tokyo today as the German lender began to slash 18,000 jobs in a 7.4 billion euro restructure. Well, Ulrich will tell us more. Let's cross over now to Frankfurt. Hello, Ulrich. A very good afternoon to you.
Thanks, and the same to you.
Right. Now, the radical changes at the Deutsche Bank that were announced on Sunday are not just rocking the bank and its staff, but also the share. It is tumbling the second day in a row. What are investors worried about?
I think they're worried about the fact that this is a very complicated package of measures that are to be taken, and it's going across the bank. There's a whole slew of new leadership positions that have been filled, two people from outside the bank, varying responsibilities, and very, very ambitious goals. And people are asking themselves, is this really going to happen? Considering that with the kind of job cuts that are out there, 18,000 people. Will this be the last word is another question. It could affect employee motivation. And you also already mentioned investment bankers leaving. I mean, that's still supposed to be a part of the company. It's still supposed to generate profits sometime in the future, much more than at the present. Will it do that if the company is treating people the way it is, asking them to leave basically on the spot with an envelope with their papers under their arms? Another question is whether Christian Sewing, as CEO, is the right guy also to head investment banking. He's surely up to the job, that's no question, but he's going to have to serve double duty. And then some people are just skeptical about this whole thing developing the way it did, how it was communicated. I spoke earlier to a guy I know here from the exchange. I was having a coffee outside the exchange just across from the entrance. And he said, you know, it's a funny thing. 2018, the investment bankers, it was mostly investment bankers that got bonuses. 2018, they made up a large part of the $2.5 billion that the bank paid out, should now be let go. Not all of them, but some of those big earners getting a big bonus 2018, although the bank hardly made profit, now being let go. It doesn't seem like it's a very well thought out plan, he said. And I think all of these factors contribute to the market showing such a skeptical face.
Anyway, in another corporate news, the German chemical giant BASF issued a profit warning, saying the profits for the second quarter and the full year would not meet expectations. How is the market reacting to this?
Yeah, it's basically a shock. One analyst who heard about it said as much. It came as shocking news. And not only because, of course, it affects BASF. It's a huge company. It's the biggest chemical company in the world. But it's also basically a mirror on the world economy. because so many businesses use its products, and BASF is feeling that the world economy is not running as smoothly as before, that orders are becoming smaller, or price negotiations are becoming more difficult. And BASF is also putting the finger on the main reason for the world economy as it sees it slowing down. That's the trade conflict, and that's still there. Mainly USA, China, but of course Europe is also bracing for action by the US president on auto tariffs in the European case. So a warning from BASF, and a warning that says that yes, the trade conflicts are being felt, even though the final word has not been said yet. So the BASF share is tanking, and it's taking other shares with it here in the German market. There are plenty of them. Covestro, for example, also in the DAX, or Lanxess, which was in former days a part of Bayer. They're all going down by about 4 or 5%.
And in other news, investors are bracing for tomorrow. Now, the chairman of the Fed, Jerome Powell, is due to testify in Congress on monetary policy and the state of the economy. What are traders and analysts expecting?
Well, they're expecting him, they're hoping for him to say that they're going to continue with a view to, let's say, lowering interest rates rather than staying put. People were pricing in, for example, one bank up to September that the lead interest rate in the United States would go down by 50 basis points. And some say in July there will be one, and one later, an interest rate drop. But, you know, you saw that strong labor market data on Friday, much stronger expansion in the labor market with the new jobs being added than expected. And I saw one commentary by a journalistic colleague on US TV said, you know, when you add up all the job additions, new jobs being created so far this year, the average is not that much different. It's lower, but it's not that much lower than the average for 2018. What did the Fed do in 2018? It raised interest rates because the economy was going so well.
Right, Ulrich, of course, we'll keep a tab on Jerome Powell and his team and get to know what he has to say tomorrow. Enjoy the rest of the day. Thank you for your time.